Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, welcome back to another episode of the Real Estate Investing Club Daily Deal Review. Today we have Daniel Weisfield with us. Daniel was recently on an episode, so if you missed that full episode, he goes deep into mobile home parks. Check out maybe one or two episodes behind this for the full Daniel Weisfield episode. Other than that, we're going into one of his specific deals today. So Daniel, tell us, where was this located?
Your backyard, Linwood, Washington.
Oof, I love it. You're the first person to say Washington, so you should be proud about that. What type of property was this?
And just for the folks who don't know, Linwood, Washington is Seattle market. It's probably 30 minutes north of downtown Seattle, which has been one of the high, faster growing cities in the U.S. over the past decade. Yes. What type of property? Mobile home park.
Mobile home park, of course. On top of what Daniel just said about Linwood, if anybody's seen Seattle's appreciation rates, it's like a hockey stick. It's just those past 10 years has been ridiculous. So I'm sure this will have some interesting numbers to it. So third question, how'd you go about finding this mobile home park?
This was through a broker relationship, a trusted broker relationship. So if I look at, we own 33 mobile home parks in 5 states. If I look at all the deals we've done, 95% of them have been off market and not listed, but most of those off market deals are through trusted broker relationships who kind of bring us an opportunity because they know we're a good partner for them. And that's how we sourced this one.
I love it. And I feel like that sentiment has been echoed across almost every single real estate investing club episode, is that relationships matter so much in real estate. They matter in every business, but in real estate in specific, your network really does push you along. So I love that you said that. Moving on, what about this particular property really interested you? Why'd you guys want to buy it?
So the property name is Serene Terrace Mobile Home Park. Anyone can look it up. It's on Admiralty Way in Linwood, Washington. It's a 132 space mobile home park. It's a senior park, so it serves adults age 55 and up. It was built back in the 50s. Grandpa built it. Not my grandpa, but someone else's grandpa built. Came back from World War II when he built this park, and built it as a retirement community. Back in the day, they had badminton and croquet, and they had a little pond with a fishing derby. And it was kind of a nice place for people, kind of normal folks, to retire in a single life. And it stayed in the family, between 1950 and 2018 when we bought it. And over that 70-year period, the quality went down, right? Grandpa built it, but then the next generation doesn't quite know what to do with it, but it's still in the family. And so by the time we saw it in 2018, it looks like a rundown trailer park, right? All these old single wides that look like sardine cans, and the roads were not paved, and the grass was growing up through the cracks. And so it kind of looked like a dog, to be very honest. But all the fundamentals are awesome, right? It had great bones. So awesome location, right? So much demand for affordable housing in the Seattle market, not enough supply. A nice institutional size park, more than 100 pads. It's really nice to find a 132 unit opportunity. City water, city sewer. And this could be a great community that residents are proud to call home. There's such a demand for high quality retirement living in the US. And it just needed an owner who could come in and, provide that extra tender love and care, right? And renovate it and kind of bring it into the 21st century. And so we saw a big opportunity, and that's why we were excited.
I love it. Yep. It's amazing how many parks out there, grandpa built it, and then his son or daughter or whatever just didn't want to own the park. And since then it's just kind of gone down and down, just waiting for somebody to come up and give it the TLC that it needs. So I love that backstory. So how'd you guys go about financing it?
So it was a $10 million purchase price. As some of your listeners may know, others may not, there is awesome debt available for mobile home parks. Fannie Mae and Freddie Mac both offer non-recourse debt on great terms. So, you can get 70% loan to value, interest only for, the first 5 years, then go into 30-year amortization, with rates in today's environment that have been the 3.25% to 4% range. 4% would be on the high end. So we took out a 10-year fixed rate Freddie Mac loan at 70% loan to value with a rate, I think right just under 4%.
Huh. I didn't know there was interest only loans out there for Freddie Mae or institutional grade loan with interest only. That's awesome. Yeah. So how'd you go about adding value?
So many ways. So many ways. This has been a labor of love. So I told you in our podcast earlier, we think about parks in 4 ways. The first one is safety and compliance. The next is profitability. The third is resident relations. And the fourth is physical assets. And we've added value on all 4 fronts. We've paved roads, improved lighting, built a fence to keep out kind of a homeless encampment that was creating some crime problems in the park. We have worked closely with residents to help residents upgrade their homes. There are some residents who are really elderly who weren't physically able to upgrade their homes and really couldn't live in the park anymore. And we kind of helped some of them move on. We talked to their families and said, you know what, this isn't the right setup for them anymore. As people moved on, we pulled out old homes, and I run a manufactured home dealership. I have 3 employees who just do that full time. So we brought in probably 7 or 8 brand new energy efficient manufactured homes into the park. We're bringing in a lot more, renovating the clubhouse, renovating the pool, you name it. We are turning this place, totally transforming it.
Wow. I love it. That's a lot of love that you gave the park afterwards.
Yeah, a lot of work.
So how'd you go about exiting? I think I know the answer to this one.
So our strategy is long-term hold. So for us, we think the best way to build wealth in real estate is to buy great assets, improve them, and then hold them forever. And why would I sell an asset when there's such a great market to refinance and pull out a bunch of our equity, and then I can still keep it and keep cash flowing? So for us, the exit is refi. It's not a sale. We have not done our first refi yet, but we'll probably do a supplemental loan in the next probably 2 years.
Nice. I love it. So long-term hold.
That is.
It doesn't even matter. Mobile home parks are great for it, but every asset class in real estate, I feel like that's the strategy to approach is refinance rather than sell. Unless you're in Seattle and you had a duplex that appreciated by $1 million or something like that. So take us through high level. What were the numbers for this bad boy?
$10 million purchase price, roughly $7 million loan, roughly $3 million in equity. When we bought it, it was probably a 4 cap on in-place income. At this point, it's probably up to a 4.5 cap on in-place income as we've slowly raised rents. It is probably worth $15 million today. We've probably we've probably gotten around $5 million in equity value, largely through appreciation. The whole asset class has gotten hotter. People are paying higher and higher prices for mobile home parks. And, we paid $10 million a few years ago, and I think now 3 years later, it's worth 15.
Oh, wow. That's crazy how it works.
And that's not just through market appreciation. We've done a ton of work, right? We've done a ton of work improving it, but part of the value increases from what we've done, and part of it is from external factors in the market.
Yep. And it's located in Linwood, which is a great location to have something.
Yeah.
Awesome. So last question, what was the biggest lesson you learned through this entire process?
Pay up to buy great assets in great locations. You're not going to regret it. I don't think I'm ever going to regret, paying a premium to buy a great institutional quality asset in a great market. Because I think the whole market, like forever, for the next 10, 20, 50 years, always going to look at that and say, that's a great asset in a great location, and the value is going to keep going up.
Huh. That's in both of Daniel's episodes. I think that's the gem I'm going to take there is pay up for a good asset class. That's a good piece of advice. Awesome. Well, Daniel, that's it. That's the daily deal review. So I appreciate you hopping on here a second time to talk a little bit more about mobile home parks.
It was fun, Gabe. Thank you. Appreciate it.
Absolutely. And as always, for everybody who's here with us today, thank you guys for showing up. You are the reason that we do this. So we appreciate having you here. As always, if you have any questions, reach out to us, therealestateinvestingclub.com. We love to hear from you guys and answer any real estate related questions you guys have. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you're able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.